Hey everyone, welcome back to Corporate Decoder, the place where we look at financial documents to find out what's really going on behind the scenes. Today, Bill Holdings is in the spotlight, and it looks like they've got some interesting news to share that goes beyond just their latest financial checkup. So Bill Holdings Inc. dropped a report on August 27th, 2025. Now the big news here isn't just about how they did in the last quarter, they're also telling us about something else pretty significant. They've got a new share repurchase program, which means the company is planning to buy back its own stock. Think of it like a company saying, hey, we think our stock is a good buy, so we're going to buy some of it ourselves. This one is a big one, up to $300 million worth. Now, why would a company do this? Well, it can signal a few things. It could mean they have extra cash and aren't sure where else to invest it better. It can also be a way to boost the stock price, because when a company buys its own shares, it reduces the number of shares out there, making each remaining share technically worth a little more. This is often a signal of confidence from the management team and the board of directors. Bill plans to buy these shares from time to time through normal market activities or even by setting up special trading plans. They say it all depends on business conditions, market prices, and other factors. And importantly, they can stop or change this buyback plan at any time. It's not a promise to buy a certain amount, just a permission slip to do so. The company also mentioned they'll be talking about their financial results for the fourth quarter and the full fiscal year ending June 30, 2025. This means we should be paying attention to their earnings report, which will be part of this filing. They're also referencing some financial metrics that aren't strictly according to standard accounting rules, known as non-GAAP measures. They're being transparent about it though, and they'll explain how these special numbers are different from the standard ones. This is common because companies often want to present a picture of their financial health that highlights their core business performance, stripping away things they see as temporary or unusual. The press release itself is attached as an exhibit, meaning it's part of the official filing and gives us the details of these financial results and the repurchase program. The sign-off on this report is from Rohini Jain, the Chief Financial Officer. CFOs are key players in how a company's finances are managed and reported, so her approval here is noted. Now let's think about the bigger picture here. Bill Holdings is in the business of financial software and payment processing, helping businesses manage their accounts payable and receivable. It's a competitive space, and companies like this are always looking for ways to grow and show value to their shareholders. A share buyback program, especially a substantial one like $300 million, is a significant move. It suggests Bill might be feeling financially strong and that its leadership believes the company's stock is undervalued or is looking for a way to return capital shareholders. This can be viewed positively by the market as it often leads to an increase in earnings per share. If a company buys back a lot of stock, the profits are spread over fewer shares, making each share look more valuable on paper. However, it's also worth considering why they aren't investing that $300 million back into the business. Are there no exciting growth opportunities like acquisitions or new product development that they believe will yield a better return, or is the market simply not rewarding growth as much as it's rewarding returning cash? These are questions investors often ponder when seeing large buyback announcements. Often when I see a buyback like this, I'm immediately looking at the company's debt levels and their free cash flow. If they have a lot of debt or their cash flow is tight, a big buyback could be a risk. But if they have plenty of cash and low debt, it can be a smart move. We don't have the deep financial tables from their earnings report here, but the fact that they're announcing this alongside their results tells us management wants this to be a key takeaway for investors. Looking at Bill Holdings, they're essentially a platform that simplifies business payments. In a world increasingly moving towards digital transactions, this business model has solid potential. The key for them is to keep innovating, attract new businesses, and retain existing ones by offering a smooth and reliable service. Any slowdown in customer acquisition or an increase in companies leaving their platform could hurt their financial results. For Bill, the fiscal year ending June 30, 2025 is a crucial period to assess. Their ability to manage costs, grow their customer base, and handle the competitive pressures in the fintech space will be telling. The share buyback announcement suggests they're feeling confident about their position and future profitability, or at least they want the market to think that. So to sum it up, Bill Holdings is not only releasing its quarterly and annual financial results on August 27th, 2025, but they're also signaling a major confidence booster with a $300 million share buyback program. This is a strategic move that could affect their stock price and how investors view their financial health. Now, let's think about what this tells us about Bill Holdings. On one hand, a share buyback is often a sign of a healthy company with strong cash flow and a belief in its own value. It can be good for shareholders as it tends to increase earnings per share. However, it also raises questions about growth investment. Is the company priorities higher fully available? We'll need to see if the financials back up this confident move. The true strength will be in the details of their revenue growth, profitability, and cash generation. What do you think about Bill Holdings' decision to announce a $300 million share buyback? Does it signal strength or a lack of better investment opportunities? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.